Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Uh, Here we are working our way through this absolutely insane year, 2020. We are about, almost 4 months through. Another 8 months to go. Full disclosure, for whatever it's worth, that doesn't really make any difference to you YouTubers. But I went and socialized with some TRIers last night here locally. And I'm feeling a little bit delicate here today. So we had interesting daily brief this morning. Hope site people got some value out of it. But more of a rant and sort of overview of what's going on in this world and how we have to put, like things like we saw out of the crude oil market yesterday into context, given this crazy ass year. And the sad part about things like crude is everybody's like, well, why is this happening? Why is this happening? Why is this happening? And I mean, I don't think anybody has any sort of explanation. Interesting, sometimes in this capitalist experience, we have to kind of like make this story up as we go along. Well, why the hell did that happen? Why did that happen? And I'll tell you, hearing Russia, Saudi Arabia, and the United States of America talk about entering a cartel together to fix prices, what the hell's going on in this world? I mean, it's crazy. And then in the same breath, I also heard Mr. Putin was running around Moscow boasting about how he was going to bankrupt the United States of America and put the shale oil business out of business. So, crazy world. Go slowly. Don't take too much risk. Try and trade setups. Risk management, critical in this kind of environment. Don't let a small losing trade turn into an absolute disaster that could wipe your portfolio out. I've seen it happen before, and I guarantee you I will see it happen again. What I wanted to show you here from this page was this right here. I think this is a pretty good article. Obviously I posted in the lounge and stuff like that on TRI side. I'm not quite sure how I would do this with YouTube. I mean, you can always Google this, look up Rex and netting, go to Market Watch, whatever. I mean, it's on all the rags. But I thought this was a really good breakdown of what's actually happening, how just simply the producers are just way overproducing. And it's not even really a case that they even want any money. They just have more oil coming out of the ground. It just keeps coming. They could shutter the whole damn thing, but actually there's quite a bit of money involved in shutting down and sealing up old wells. That's pretty expensive. So what are you to do? Right? Fascinating read. And also, too, I find it fascinating and just comical in a weird sort of way. How the whole point of the cartels and stuff like that was to try and screw the Americans. And now the Americans are talking about entering a cartel. This makes no sense at all. And also, too, what I see is, gee whiz, just a ton of politics going on here. And Mr. Trump could be in a bit of trouble here if he sees the Dakotas start to slip into bankruptcy. And all of that shale oil boom economy just vanishes. So this is fascinating times we're living in. Absolutely fascinating. For your purposes, I generally like to just sort of keep the conversation to just a few themes, some ideas that we're sort of working on, and just some overview of sort of the bigger sort of macro picture. Always a good idea to start with US dollar. We did go US dollar index. We did go and break these tweezer tops here this morning. So that sort of paints AB equals CD, which basically implies we're going to go up and test Mountain Man and this recent high there at 100.93. So, 101 is probably your target there. And we talked a little bit yesterday about how this keeps coiling. We, kind of broke out here, but not really violently. And not really with huge resolution. To me, this looks like just a very small continuation trade. So we'll see how that goes. And as we said recently here, if you see US dollar index itself pressing higher, that generally means, people are not so happy about taking risk. Uh, how do you explain what's going on here in the crude oil market? Can anybody explain this? This is just absolutely insanity. Um, as we sort of talked about at length on the site, no real trader worth their worth has any business whatsoever trying to trade this move. This was in a front contract well beyond the first notice date. So all quote unquote traders, they're not even participating in this. This is just a illiquid front month contract where clearly somebody was caught by the short and curlies. I'll tell you, I've never seen actual negative prints on futures contracts before. That this is brand new to me. So welcome to 2020. This is insanity. And again, it's a great commentary. You better be damn careful here with your money, because you take one wrong trade here and you let it get away from you, you could kiss your capital goodbye. See ya. Wouldn't want to be ya. So be damn careful here, people. Interesting, I put out a tweet yesterday. I was kind of curious as to, because a lot of people are talking about Bitcoin correlation with stock market, that kind of stuff. And what I've actually found here doing this just cute little study going back to the beginning of the year is actually I think Bitcoin is leading the stock market, which of course pisses off people like Warren Buffett to no end. But you can clearly see M-top, divergence, you can see the date bars. Bitcoin breaks down, stock market follows. Divergence, bottom here in Bitcoin. Stock market's making new lows. Bitcoin rallies, stock market gets dragged up. Now we have a situation, lower highs in Bitcoin, higher highs in the stock market, another one of these divergences. And interestingly enough, I just simply took this price action and said, okay, well, since it looks like the corn is leading the stock market, let's take this price action and let's just throw it on the stock market. And that's pretty much what I was expecting to have happen. And you can see right out of the gate, bang, and down we go, down to the bottom end of that range. Still really screwy information from CBOE on options expiry. So me personally, I'm having a really hard time interpreting the data because they're not giving us the data. It's like the 1%. Okay, so the public's catching on to this shit, so why don't we just not bother publishing it anymore? Something's very suspicious. Again, 2020? What the hell do you make out of this year? It's just crazy. Clearly, kind of like this image up here. If we M out here on Bitcoin, then I think that's going to bode very, very poorly for the stock market. But, we've talked about this. There's two more major pivots coming up in the stock market. Well, in our whole bloody planet. One at the end of June, and then the other one at about the middle of November, which just so happens to correspond with that crazy U.S. election coming up. Lots of gaps to the downside. We know gaps like to be filled in like 91% of the time, so we are going to head back down here. It's interesting, when you look at the corn, though, because it's sort of 24/7, it doesn't really produce price gaps that often. But if you want to sort of see what the stock market people are seeing, we can always pop on over to something like the CME contract and look at their futures. And you see that, oh, gee whiz, the futures contract, this is June, you can see it's got gaps all the way back down at the bottom. So, and especially like this kind of action where you see that's clearly a hole in the price charts. So my hunch is, and you can kind of see, if we lose this level, it's going to be very head and shoulders-y. Heading into sort of that June trough that I'm looking for. And really now we're getting near the end of April. Remember we had said that usually the corn heading into their halving events has a nice little pre-pump that's about 20-25 days ahead of the actual halving event. We're running out of time here, people. I would have liked to have seen nice pushes up into Mountain Man and Collins Buddies and all that kind of fun talk. But if the market just can't get going, the market's going to do whatever the hell the market wants to do. And if we start emming out here, well, that's probably going to be very problematic for the bulls going forward. And, let's call a spade a spade. Risk is extremely risky right now. I say this in the public videos, and frankly speaking, I'm not doing myself any favors. I actually think if you are Joe Sixpack, you've got a full-time career, you're doing stuff on your own, and you're kind of like, hey, I kind of want to trade. Put the mouse down. This is not the time to actually start risking your retirement in this kind of market. It just isn't. It's not in your best interest. Now, look at that. I just basically told everybody to turn the YouTube channels off. Yeah, that's going to sell newsletters, that's for sure. But, do you want to take the chance of this kind of shit happening to your assets? I don't know. I've been playing this game for 30 years. There are definitely windows where it's actually really easy and it's a lot of fun to make money and trade and, watch your account balances go up day after day after day kind of idea. This is not one of those environments. It just isn't. It's just the way it is. Sucks. It's true. I will say that there are some great opportunities out there. We have option spread traders on the site who are just having a field day trading spreads. There are the little names that are popping here and there. So, if you can manage yourself, if you can approach this professionally, if you can act when you have to act, well, there are some opportunities out there. But Joe Sixpack, I'm interested in learning about the stock market. This is not a friendly stock market. And if anything, if you are brand new to this, my advice for you, and remember, we don't give financial advice through these videos, and here I go just rambling again. I don't know how long this video is going to be. But my advice to you is actually take the next year or two and learn. Paper trade the shit out of this market. All our level 1ers, you got to have 100 paper trades before you're going to start risking your hard-earned money. Frankly speaking, that's not a bad idea. And if it takes you the next year or two to go through the process of learning the process and getting really good at the process and doing all those paper trades, you're going to come out the other side, 2022, 2023, and we're going to be back into one of those funny bunny kind of market states where, W's are all over the place and governments aren't freaking out anymore and coronaviruses are a thing of the past, and, we look back on it telling fun jokes and stuff. And you will be in a position to be able to kick ass. But I can just tell you right now, this is not that kind of market state. It's just as simple as that. Okay, so having said that, I do find it interesting, our funny little bond trade. Great analogy of setups, right? If anything, this is such a perfect analogy of a trader's life. You can see now the bonds have actually gone and broken the highs from this rally peak here. So just say you're long, stay long, enjoy the ride. Interesting how we could probably even start drawing, like we had said that there was a cute little long setup for a move back into 50% rules and reload zones and stuff like that. You can see the real fight here through the reload zone. Am I going to top out? Am I going to? Nope, I'm still a bull. And my hunch is if we drill down to, like, say, a 15-minute chart or something like that, I bet you see a nice consolidation set up to take us higher even through this. But ironically enough, when we're looking at the rags, the only market that you could possibly get excited about here today, I don't know what the hell you make out of this crazy-ass crude oil. But the only market that you can really actually say, hey, there's a bull here, is the bond market. Okay? Even gold looks like shit here. But the bonds, they just keep marching away here. So, go figure. Definitely a risk-off kind of environment here. And it's interesting. Remember we had said the other day how this gold market, we're at a really important inflection point here. And you can see we're not done with this level. They brought it down into this level, took it away, and then they rolled it over. Look how low they took it here this morning. We're not done playing with this level here yet. And I might even argue, if we drill down to lower time frames. Yeah, we talked about this yesterday, right? Remember, na-na-na-na levels, right? The real na-na-na-na level is all the way there, right? Ah, look at that. So they brought it right against those, probably tripped up some stop loss orders. Ding, 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 ding. And then, boom, right back out of there. So it's interesting how they put this double bottom in here, rallied it up, and then, oh, big fat M's. So you can see W, hey, I'm a bull. And then M, oh, no, you're not. And back down we go. And, of course, like I said earlier, given what's going on in the crazy-ass crude oil market, could we see some absolute insane blowout price action here? Absolutely. And I tried to convey this message. I know it's a very difficult message for most new people to trading to understand, but here is a very graphic illustration of what kind of market we're in. This is the consumer price index, or in essence, what all these sort of government bodies like to use to gauge inflation. And as you can clearly see, right, energy is a huge component of the CPIs. It just is. How much does it cost to fill up your tank of gas? Right? How much does it cost to heat your home? So clearly with the big whack in energy prices here, you can see consumer price indexes are going to be collapsing. This is not inflationary. This is deflationary. So, you see the price of crude oil right now. Quit. What I absolutely hate is that I keep trying to convey this deflationary message to people and people keep fighting me. I don't get it. So be careful. You might see your gold market does something very similar along the lines of crude oil here. Be careful, everyone. And of course, that's not a very politically correct thing to say in this world, especially with all the gold bugs and stuff. Yeah, screwy world we're living in here right now. It is interesting to see, us talk about stock markets. Actually, it is interesting to see our risk on, risk off. Remember we talked about this a week or so ago, about whether the Russell 2000 would start outperforming relative to the bigger stock market. I think the jury's still out. It is nice to see. Remember we had that inside bar failure there, I guess about 4 or 5 days ago. Then we have this little fractal bottom yesterday. Are we going to inside bar again today? Possibly. Really, I might make the argument we have to see this range resolved before we can make any big conclusions. And we have our TRI SOF team meeting tonight. Tuesdays we have the SOF meeting. So it'll be really interesting to go through all the little junior stocks and stuff that people have been interested lately, see how they're looking. This is a stock that I told you about yesterday. I really like this agricultural play. They're in the greenhouse business. So you can see I even said yesterday I don't want to chase this thing. It was as high as when it got as high as 450 yesterday. The clothesline breakout level there was 419. So I just threw my bid in and ding, 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 ding. I picked up some stock here today. So we'll see how it goes. But I'm, Brian, right? You hopefully all can see the W's. If we start failing through these levels, I'll probably just walk away. And you better have your plan crisp, right? You better identify your risk. I mean, I put 0.5% risk in my portfolio on this name. 0.5%. I'm not making any big bets here. I do like the company and I like the story. I'll take a shot, but 0.5%. That's the kind of money I'm putting to work in this. Specifically with regard to the corn, I think I had sort of said there a few minutes ago, I actually am liking, where did I put that? Yeah, I'm liking this thinking here. And, this kind of thinking, of course, is going to drive guys like Warren Buffett crazy. Because I actually believe that Bitcoin is actually leading the stock market. So really, it's just a question of does Bitcoin go and M out here and we actually start creating structural failures and structural signals? If that's the case, then my hunch is stocks are going to get whacked too. And what I'm worried about is I've seen repeatedly that prices like to get bid up into the halving. Once the halving event happens, what's the fundamental reason to own Bitcoin following that? What's the driver? What's the, hey, this is coming up? I can't think of much. I think a lot of people have been looking forward to this event, but once the event happens, what do you do then? Also, too, kind of sucks, but I I've been in the crypto Bitcoin space now since 2013, so that's like 7 years. Eh? I've never seen a birthday. My birthday's May 11th, right around halving. What a coincidence. I've never seen a birthday where Bitcoin was actually in a bull. Never seen it. In 7 years, I can literally set my watch that my birthday, Bitcoin will be down. So my hunch is we probably top out somewhere here near the end of April. And then we'll do our normal correction into the halving event. And then we actually have to wait for the market to actually find a technical floor where demand actually steps in. And given all our concerns about lack of divergence on higher time frame charts, bearish AB equals CDs pointing lower. My concern here is that June, end of June, July, beginning of July pivot event. My feeling is Bitcoin price will be lower, but what the hell? That's just Brian's opinion. Hopefully, I'm wrong. The only other thing I sort of talked about with the community here today was, we have a lot of people who are interested in the altcoins. So I actually really like this. Did I just say that? I really like shit. Oh, well. At least it's called Shitcoin Index. So I don't have to just say I like shit. But I really like using this index as a nice little proxy for the space. I think it works pretty well. We had talked a little bit yesterday and over the weekend about how I had bot setups that were kind of suggesting sneaking in. But I think the rallies just happened too far too fast. And so I didn't really get solid setups being constructed. So now watching the price action overnight, I've redrawn sort of my bot levels off of this low back up to this high, and then what does the consolidation following that event look like? And you can see they're trying to establish some sort of floor here. My hunch is if you do see this actually trade up and W out here, we're getting ready for another leg higher. So, I don't think it's in your best interest to get into the business of predicting whether this will happen or not. Just set up your setups, set up your levels, and if this does happen, you're just, my trading plan says I buy bought breakouts on W's with 3 higher lows, blah, 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 blah. And so I got to just take the trade and just live with the results. And kind of like this crazy-ass bond trade, right? I mean, you don't know what's going to happen. You're just here to... That's the interesting thing about this. I've sort of said this to the public before, but I don't think people really get this. Number one, you're never going to be right 100% of the time. Get rid of that. Just get rid of it. Because what ends up happening if you don't get rid of it and you're Mr. Ego is maybe you're right like 80, 90% of the time. And sell lots of newsletters, blah, blah, blah. But I can guarantee you the times that you're wrong, even 5, 10%. And if you're right like 90% of the time, fuck, that's a killer track record. But those times that you're wrong, 5, 10%, oh my goodness. Lawsuits, the whole fucking thing. So I strongly suggest to everybody, don't get in the habit, don't get into the business of predicting what the future. It's a mugs game. Trade your setups, all right? Don't have an opinion. And the irony of trading is most of the time our opinions are wrong. You constantly hear me talking about, I think this is going to happen, but so what? It's just Brian's opinion. And you don't get paid for opinions. Having an opinion's not going to pay the rent. Ironically enough, the only thing that actually pays the rent is you getting in there and trading. And if you're right, because your setup worked, awesome, great. That's a comment on your setup and your trading plan, and you see your account balance go up, and you can pay your rent. But just sitting there saying, I think the bonds are going to go up, I think the bonds are going to go down, that doesn't pay the rent. Right? Just because you think something's going to happen, how do you frame your behavior? Where do I get in? Where do I risk to? How much money should I risk? Right? How on earth can I take a trade and not be riddled with anxiety while I'm in the whole trade? That's the sign of the professional. So anyway, point here is that I was... curious to see whether we would get trend continuation setups to try and take us back up top. on this poop index. Not seeing anything yet, so just big hurry up and wait. But I do like the fact, especially if we just draw this really simple trend line off the top. Good old LJs. And Leanne, if you're watching this video later on, just reach out to me. You always have a direct line to me. You can DM me on Twitter. You can Facebook me. Hell, just open up your window and just yell. Right? I should be able to hear you. So Leanne was sending messages and stuff. She was having a hard time getting on the site. So I'm here for you, sweetie. If you're watching this video, whatever I can do to help you, just let me know. But you gotta reach out to me. I can't help you unless you reach out to me. But I did see people on the site. In fact, actually, one of the other UKers, he reached out to me and said, "Hey, can you help Leanne out?" But I'd love to hear how you and the babies are doing. Anyway, this video turned into a letter to Leanne. Sorry, she's probably not even watching this. Anyway. If this does W out, hell, if we can get 3 higher lows, I don't like the fact that we didn't make it back to 33% here, though, so that's a little bit bothersome. If anything, what I'd actually like to see is it come down, make another new low, hit at least 33%, maybe come back against these railroad track lows, and those railroad track lows do hold price. Then we start Wing out, and away we go. But, if this happens to be the path that the market's going to take, and we do start getting W's that come in on the other sides of trend lines, well, levels are levels are levels. So it is there, caveat emptor. Probably won't be a trade I'll take, but, food for thought. Let's see. And, your shit perp index here has actually made it really easy. If you see a bar closing above this, happens to be a daily chart off of this FTX. I don't know whether you can get this index or not. But if you see a nice close above that 573.40 number, that probably is telling you, hey, alts are feeling happy again. The bull is back on. And then, of course, if we M out here, and, we talked about those M's on Bitcoin and stuff, you can see the same Ming type pattern. If we M out here, then, she's toast. So, okay, I think I'll leave the rant at that for today. Sure hope you got some value out of all of this. Crazy, screwy markets we're in. There's no doubt about that. Go slowly, everybody. Remember what your number one job as a trader is to do. Don't take that lightly, right? Because this is exactly the kind of anecdote where one wrong trade and you could wipe yourself out. So don't let that happen. That is your number one job, especially in this kind of market state. Okay, everybody. Have yourselves a great day. All the best, and bye.